Hello everyone, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. Well, you can see that Nifty spot in the daily time frame chart on my left hand side over here is in the uptrend, but in the last few days we can see prices are just bouncing just up and down. I think if you have a look in the 2 hourly time frame charts, you'll be able to notice in slight more detail that the lower end of the price action has been 23,850 or 845 and the upper side has been 24,591. So let's discuss in detail why this choppiness is happening. All right. So for starters, I think we should first pick the monthly time frame chart. In the monthly time frame chart, I should say that the bounce back has been very impressive. We can say that this particular candle is a bullish candle. Then we had a very big hammer. And currently the price is trading above the dual moving averages. So yes, we do have an uptrend in the monthly time frame chart, which is trying to struggle near this particular candle, which is at 24,873. Yes, in terms of price, we are still far from that level, but in the monthly time frame chart, you will clearly see that the level is pretty much near, because in monthly time frame chart, the size of the candles are much bigger. Going to the weekly time frame chart, things are a bit different over here. We can see that the price has been able to bounce back from this strong, very, very strong support. Like this is the first time when the trend line support has been very, very active over here. Price did violate the trend line in intra-week, which means between Monday to Friday. But still, since the trend line was strong, it propelled the price on the upside very, very fast. That was one of the reasons why we had such a fast and such a big pullback. Now, if you just look at the pullback properly, you will see that the prices have moved up very fast. Even we have trend line breakout in the RSI, all that is fine. In fact, we have dual trend line breakout in RSI. I agree with all of that and I respect it. It's fine. But if we see the candles which are being made over here, this particular candle is a sort of a shooting star. This is, I think, a candle. This is not even an inverted hammer, not even a shooting star. This is just a candle. Neither it is a bullish candle, neither it is a bearish candle. But one thing I can make out from this one is that there is some sort of resistance which is troubling the markets at the upper levels. And that is why we have such a big wick over here. Now, does it translate that we have some sort of bearishness in the market? The answer is no. Just one or two candles cannot just create panic in the market until and unless we have more proof on the charts to support that bearishness. But when you look at the daily time frame charts, you will notice one thing, that price has been very, very choppy sideways. And the main reason is this one-sided move on the upside. If you just have a look at this up move, and if you compare this up move with this one, so I think the number one pullback is more 45 degrees and the second one is close to maybe 80 to 85 degrees, something like that. Okay, I don't have a protector in front of me, but the thing is, it's visually very much possible to understand that this pullback has been vertical, has been very, very fast. And generally, after a very fast pullback, after a very huge pullback, if the market wants to continue moving on the upside, it will try to consolidate. And what is the importance of this particular level? The importance of this particular level is that we are at a 101.272% extension. So that is the reason even on Friday when the markets tried to trade above it, because I think on Friday I did see Nifty once more than 200 points up, but again by the close it came down. And if we just elongate this level higher, you can see this particular high. So this is not very, very important. But when we have a Fibonacci level coexisting with a swing high, a very small swing high, it adds a little bit importance to it. And to just look into the shorter term time frame charts, you will also see a little bit of negative divergences shaping up in the RSI and the price. So this is clearly nothing else so far but a consolidation. And I guess it can be possible that the consolidation may continue for next few days as well in the market. All right. So going ahead in Bank Nifty, now looking at the Bank Nifty first, once again, we'll try to look at the monthly time frame chart. The monthly time frame chart in comparison to Nifty is much, much stronger. The momentum is also much stronger. RSI is close to 70. It's at 67 or 68-ish, and it is looking very, very strong. Going to the weekly time frame chart, yes, the momentum is very high. The RSI is very, very strong. Visually, we can clearly see that we have a trend line breakout in RSI. Things are fine. But what is a bit problematic is that we have a slightly more overstretched market. You can see the space between the moving averages and the price, which is a bit more. And going into the daily time frame chart, we will be able to see this into a bit detail, that there is one extension over here, Fibonacci extension, which is at 56,400. So you can see the recent top was at 56,110. In such a big rally where I think Bank Nifty would have been able to rally by close to probably 14% in a matter of 10 trading sessions and 19 days. Okay, because we had a lot of holidays in between. So in 10 trading sessions, when Bank Nifty rallied by close to 14%, I think 200 to 300 points don't matter that much. And we do have a resistance here. I think Bank Nifty is sensing it, and it is trying to consolidate the gains. Immediate support for Bank Nifty, I even shared in my last video, is the same, 53,953.95 to 54,477. This is a support band, and you can see exactly from there in extreme short term, I think we did have a bounce back, and after a immediate bounce back, the rally did fizzle off, and again we are consolidating sideways. So I think this consolidation may continue for some more time, and it is important for the rally to continue. We need to consolidate a bit more. Yes, if we start trading below, or if we close below this support, then probably things might change. But so far, so good. Yes, markets are boring, I can understand, but it's a phase of the market and we have to go through it. All right. Going ahead, I think I will not speak much about the private banking stocks and the private banking sector. One thing is very clearly visible, that the charts of Bank Nifty and the private banking pack is very much similar. I think consolidation may continue. Even we can see over here the overbought reading, same thing which we saw in the Bank Nifty index. So I think things are same. Overall, it's bullish, but in short term, we can consolidate with the trend being up in the medium term. PSU banking pack. Now, PSU banking pack is slightly different. We can see that we have been able to bounce back from this 38.20% retracement. Okay, from this particular retracement. The pullback so far is good. The trend is flat in the monthly time frame charts. In the weekly time frame charts, it was a nice pullback. Now, these two inverted hammers are slightly worrisome because the size of these inverted hammers are a little bit big. First, it was this one. Then along with that, we had a second one. So I think we should be a little bit more worried. As of now, you can say that we are still safe. We have not broken any major supports in the daily time frame charts. The immediate support is 6339 and 6386. So I should say so far so good. It's average. It's okay. If we start breaking any important supports, then things might change. So I think it's more of a wait and watch thing over here in the next few days, maybe in 1 week or so. We'll be able to understand that what is the next course of price action in the PSU banks, right? Energy pack. Energy pack, you can say that the pullback has been pretty nice in the monthly time frame chart. We have been able to pull back pretty nicely from this 61.80% Fibonacci retracement pretty nicely. And over here again, we have two inverted hammers. Yes, they are slightly bit more unsettling for any person who is a bullish trader. I can completely agree. And I should say one thing that we have been able to make a new high and a new low in the oil and gas pack, but the momentum, the initial momentum was visible till here, then we are consolidating. And considering the fall which we had, the one-way fall which we had, I think we need to understand that only one or two stocks, if they are going to go up in the oil and gas pack, it won't hit the entire sector, has to rally properly. So I think the continuation of this particular sector on the upside will decide on the price action. We have to surpass this recent high over here of the last few days, and we need to continue a bit more higher, because there are many swing highs over here which may provide short-term resistance, although not all of them are very, very important. But when we are trying to pull back, when we are trying to retrace on the upside, we have to be a bit watchful. Auto pack. Now, auto pack, if we have a look at the monthly time frame chart, things are okay. Again, in the weekly time frame chart, we have two candles back to back where we have a wick on the upside. So it shows a little bit of concern. I should say that some sort of profit booking is coming up at higher levels, which is pretty sure. And we have been able to make a higher high. Okay, we do have a higher high over here, but we also have a lower low. So I think it's a more of a broadening formation, and if the consolidation continues, it's fine. If we take a dip, it's also fine, but we should be sure that if we take a dip, this particular dip should be higher than the previous one. And then if we have a rally, no issues. But if things change, then we'll have some trouble. But again, I think only time will tell in the auto pack that how price action is going to happen. So let's wait and watch and then decide a clear-cut view for this particular sector. Consumption pack would pull back initially, very nice candles for the 2 months, suddenly two inverted hammers, and what we can see here in the daily time frame chart is strong uptrend with decisive higher low, you can say. But I will not take this high this time. I will be comparing these two highs. So we can say that we still do not have a higher high. We are almost there, I should say. So in the recent few days, we have been consolidating, I should say. If it consolidates more, I think things are okay. After the consolidation, if we break out and close above this high and continue to rally, that will mark probably the continuation phase of this initial rally which occurred in the last 1 month. Okay, finance pack. Finance pack, again, I am not going to talk much. It looks very much similar to the private banking space and the bank nifty. Overall trend up, very, very strong uptrend. Overstretched, you can see RSI also went till 75 levels. So we need to consolidate a bit more before going up. Immediate supports, if you would like to know, then immediate supports as of now are this one, 26,050. If we break this support, then the next support might come at probably 25,590 or 25,600. Okay. FMCG pack. Okay. FMCG pack, now there are, this is a slightly bit more complex pattern which is visible to me in the FMCG pack. I'll speak about it. If you just have a look at the monthly time frame chart over here, monthly time frame chart seems to be improving. Trend is flat, but it seems to be improving. The consolidation slow and steady. Now, if you have a look over here in the weekly time frame chart, the initial pullback is okay. Now, in comparison to other sectors, we have one negative candle. The second candle is spreading top, which clearly says that it doesn't know where it wants to go, which means it is just indecisiveness, not fear or not worry. So in comparison to other sectors where we had two negative candles, over here we have just one negative candle. And if we look at the price action, we do have a higher low in place, but we do not have a higher high in place. Okay. So what I'm trying to say is 2 is greater than 1, but B is still lower than A. Now, although this formation is not complete, but we should accept that we have a higher low. And in the weekly time frame charts, we clearly saw that there's a lack of worry in the FMCG pack. So the initial support, according to me, is 56 to 23 and 55,080. So these are the two support levels for the short term. Overall, I think the consolidation may continue, but the trend is up. It's looking strong, and especially I think short-term traders should keep a watch over here. Okay, so going ahead on the infra pack is one of the strongest sectors as of now, and the pullback is looking great in the monthly time frame chart. In the weekly time frame chart also, we can see the trend is strong. It's up. And the momentum is up rather than the trend. The momentum is up. Now the trend is also trying to look much better. Once we close about this, things will be more clear, because this is the first time after a very, very long time where the prices are closing above the dual moving averages after many months. Good sign. RSI also looking positive. Going at the monthly time frame chart again, the daily time frame chart, it's very clear that we are in an uptrend. We have a stable higher low, we have a stable higher high in place. Things are looking okay. Consolidation may continue, but the trend is up as of now. The next resistance possibly will be somewhere here at 9,000 levels, which is very, very nearby. IT pack. Okay. IT pack, it's a bit more complex. Once again, just like the FMCG pack. This hammer has been very, very strong, I should say. Now this candle is still irrelevant because we are still in the starting of the month. If you have a look at the weekly time frame chart, we have been able to, I should say, bounce back pretty nicely. And this bounce back was pretty sharp. In a matter of, I think, 1 month, we have been able to bounce back in the IT pack by close to 17% in a matter of 1 month, which is pretty nice. But after this pullback, if you just have a look at the trend line resistance, and we are also close to this 38.20% retracement. So we are near a very, very strong resistance confluence. And if you have a look at the daily time frame chart also, we can clearly see that the trend is flat. It's not up. So far, when we when we were analyzing all other sectors, we could clearly see at least the prices are trading above the dual moving averages. Over here, the price is, I think, between the two moving averages. So I think IT sector is not very, very strong. Bullish traders should be very careful before doing anything over here. And immediate resistance, I think, will be this particular high in the daily time frame chart, and in the weekly time frame chart, this is an entire confluence, like from 36,307 to possibly 36,817, and then in the daily chart, it's 38,162. So I think there is a lot of resistance on the upside in the IT pack. So just be careful if you're a long only trader. Metal pack. I think in the monthly time frame chart, things are not very, very exciting, but it's not very bad also. We are just consolidating, taking support from this particular support of 50% retracement. We are just consolidating. Nothing bad, nothing good about it, nothing exciting. In the weekly time frame chart, I should say that after the initial pullback, it was, I think, very much possible that we could have gone up, but due to some negative news, we collapsed once again. But if you see properly that we have not been able to create a new low in the RSI, only price created a new low. This is worth watching and worth understanding. Then somewhere over here, we have two inverted hammers. So things are a lot mixed match in the metal pack. Like there are bullish signs also, there are bearish signs also. So I think metal pack as a whole, it's very difficult to talk anything about it, because I would not like to talk about any stocks in this video, because this is more of an index video. But it's a very mixed bag. When you have a look at the metal stocks, you will understand that few are strong, few are weak. So overall, as a sector, I would say that I have no view on this particular sector as of now. I would wait and watch. Like IT, it's clearly visible that IT is a weak sector, or banking is a strong sector as a whole. But metal, I have no view on the sector as a whole. Okay. Pharma pack, again, I would say very, very clearly that there are a lot of bullish and bearish signs. And yes, we have been able to pull back pretty smartly, pretty viciously from the downside, but it is consolidating, and that's all what is visible to me. More than that, I would not like to comment in this particular sector. PSE sector, initial pullback have been pretty nice. In the monthly time frame chart over here, it's very impressive. In the daily time frame chart also, it has been very nice. Last two candles have been a little bit worrisome. Yes, they are small inverted hammers, although the size of the candle is not big, but yes, they are visible to me. And if you have a look at the daily time frame chart, then we can clearly see that we do have an established uptrend, because we have a higher low, which is HL, and we have a higher high, which is HH. So things are a bit more better in the daily time frame charts in comparison to the weekly time frame chart. But for this positivity to continue, we should just be careful that first of all, at least this support should not be broken. The support band is from 9350 to 9454. This support band should not be broken. If consolidation continues, it's fine. And after the consolidation, if we close above this high, this particular high over here, 9780 or 9800, then I think things will be fine. Realty pack, I think the weekly time frame charts, it's visible. We have been able to bounce back from a very, very strong support over here, which is a Fibonacci extension. That's all right. That's okay. Last 2 weeks candle are a bit unsettling. We have a inverted hammer. Even this candle, we have a slight big wick on the upside. And looking at the daily time frame chart, the pullback is visible, but it is not very, very strong. Even if we have made a higher high than this one, it's visually not very, very appealing to me somehow. Probably because in the entire pullback, we just had one big green candle, nothing more than that. All other candles are of very, very small in size, and they are more of indecisiveness rather than looking very, very, strong, or they are visually not very, very appealing for a bull. So I think I would say that so far so good, because at least we have been able to pull back. We need to wait for a few days just for the market to share some information with us. At times, if you're not able to gauge something from the charts, it's best to wait and watch rather than trying to pull out some view from the charts. Always good trades or strong sectors or strong index will be visible to you immediately once you open the chart. You don't need to try and look it very, very for a long time to get a view out of it. So I think let's wait and watch, and maybe next few days we'll be able to understand. Okay, mid-cap. Mid-cap, I would say simple thing. Again, strong pullback. Now over here, we can say that these candles are worrisome. We have two big candles which are inverted hammers. Yes, they are worrisome for me. Although the monthly time frame chart is a bit okay, it's fine. Now we have a chart, the daily time frame chart, where the low is same, but we have a higher high. We are consolidating. We can see over here we are consolidating. Immediate support is from 52,773 or 770 to 53,350. So the daily chart is fine, but we need to consolidate a bit more. If we break this support, we might go down a little bit, but if we want the uptrend to continue, we should be sure that we don't make a lower low than this one, then we will be pretty much safe. Otherwise, we could fall in problems. Now, summing it up all, I would just say one thing. Yes, we have been able to pull back pretty nicely. But what happens is when prices fall in the stock markets, in the financial markets, there is just one thing which is visible to us: fear. And when markets rally, we just have one thing: wow. Now we need to understand one thing. Yes, we have been able to pull back pretty strongly. I do agree. I do respect it, and even I am liking it. But this pullback is happening after such a big correction. So we need to wait. We don't need to hurry. We don't need to be excited. And we need to understand that so far, not all the sectors are still participating. There is one sector which is clearly visible, like IT, which is weak. Metal is, again, no view on it. Realty, no view on it. Pharma, no view on it. All these three sectors are important for us. The strong sectors, extreme strong sectors, okay, the sectors which are leaders are still the private banking pack, the finance pack, and the FMCG pack. Okay, somewhere here. Yes, there are stocks in metals and in other sectors which are not participating, but the entire sectoral indices will go higher only when all the stocks will participate. So I think we are still in the consolidation phase. We should not be extremely, I think, greedy about anything. Let's wait out. Let's be patient. In the next few days, I think short-term traders may have some opportunity, but be watchful. Don't jump in and don't just trade any random breakouts. Be watchful. I'm not bearish about the market as of now, but yes, you need to be watchful and you need to understand which stock picks are you taking. All right. Trade less, trade wisely, and be patient in the markets. Thank you.